What if I told you that the biggest reason most traders never become consistently profitable has nothing to do with their strategy, nothing to do with indicators, nothing to do with chart patterns, and nothing to do with finding better entries? In fact, some of the traders losing money right now are taking excellent entries. They are finding good setups, reading the market correctly, predicting direction accurately, and still failing. Why? Because the market does not reward you for entering a trade. The market rewards you for managing a trade. And there is one lesson I learned that completely changed the way I think about trading. A lesson so powerful that once you truly understand it, you may never look at a chart the same way again. Because the dangerous truth is this: money is not made at the entry. Money is made at the exit. The biggest lie in trading. Let's start with something uncomfortable. Most traders are obsessed with the wrong thing. Think about it. Open YouTube, open social media, open trading forums. What do you see? Best entry strategy, perfect breakout setup, secret indicator, highest win rate pattern. Everything revolves around getting into a trade. Very few people are talking about getting out. And that's exactly why so many traders struggle. Because they spend years improving a skill that only starts the process. But they ignore the skill that actually determines the outcome. Imagine a professional athlete. Would you judge their performance based on how they started the game, based on how they finished it? The answer is obvious. Yet in trading, people behave as if the entry is everything. They search endlessly for the perfect setup, perfect confirmation, perfect signal, believing that profitability is hiding somewhere inside a better entry. After years in the market, I discovered something that shocked me. Most traders don't fail because of bad entries. They fail because of bad exits. Until you understand the difference, consistency remains almost impossible. A trade that changed everything. I still remember the trade that taught me this lesson. Not because it was my biggest winner, not because it was my biggest loser, because it exposed a weakness that I didn't even know existed. The setup was beautiful. Everything aligned. Price was sitting at a strong support level. Volume was increasing. Momentum was building. Market environment was favorable. Every rule in my trading plan was satisfied. This was exactly the type of trade I had been waiting for. So I entered. And almost immediately, the market moved in my favor. Position turned green. Profit appeared on the screen. Everything was going according to plan. First, I felt excited. Then something interesting happened. New emotion entered the room. Fear. Not fear of losing money. Fear of losing profit. That is where the real battle began. You know the conversation. Every trader knows it. Maybe I should take profit now. Maybe the market will reverse. Maybe I should secure what I have. Nobody ever went broke taking profits. Better safe than sorry. And the more profit I saw, the louder those thoughts became. Until eventually, I closed the trade. Profit secured. Trade completed. I felt responsible. I felt disciplined. I felt smart. For about 10 minutes, then the market kept moving. Higher, then even higher. The trade I had exited became one of the biggest moves of the week. And I sat there watching it happen without me. Watching the opportunity continue. Watching the profit grow. Watching the market reward patience that I didn't have. And that's when I realized something. My entry wasn't the problem. My analysis wasn't the problem. My strategy wasn't the problem. My exit was the problem. The question that changed my thinking. That experience forced me to ask a difficult question. What if profitability has less to do with being right, and more to do with managing trades correctly? At first, I resisted the idea. Like most traders, I wanted to believe success came from prediction. I wanted to believe the best traders were simply better at forecasting the future, better at reading charts, better at identifying direction, better at finding opportunities. But the more I studied successful traders, the more I noticed something surprising. Many of them weren't right all the time. Some weren't even right most of the time, and yet they made fortunes. How was that possible? The answer completely changed my perspective. They understood something most traders never learn. Being right and making money are not the same thing. Read that again. Being right and making money are not the same thing. You can be right frequently and still lose money. You can be wrong frequently and still make money. Because trading is not a prediction game. It is a probability game. And probabilities are managed through exits, not entries. Why most traders never see this. The reason this lesson is so difficult to accept is because it attacks the ego. Human beings love being right. We want confirmation. We want validation. We want proof that our analysis was correct. And entries give us that feeling. Entries feel exciting. Entries feel intelligent. Entries make us feel like we're doing something important. Exits do something completely different. Exits expose reality. An exit reveals whether you followed your plan. An exit reveals whether you controlled your emotions. An exit reveals whether you managed risk properly. An exit reveals who you really are under pressure. And that can be uncomfortable. Because most trading mistakes are not analytical mistakes. They are emotional mistakes. The chart isn't usually the problem. The market isn't usually the problem. The psychology behind your decisions is the problem. And nowhere does psychology become more visible than during an exit. Because before entering a trade, everything feels logical. You have your checklist. You have your setup. You have your rules. You have your analysis. Everything feels objective. Everything feels structured. Everything feels professional. Then money becomes involved. And suddenly the emotional system wakes up. Fear enters. Greed enters. Hope enters. Ego enters. And now the game changes. The same trader who created the plan starts ignoring it. The same trader who defined the rules starts breaking them. The same trader who promised discipline starts negotiating with emotions. Why? Because money changes the emotional environment. And emotions reveal weaknesses that analysis can hide. The pattern I couldn't ignore. After that trade, I started reviewing my history. Not my losing trades, my winning trades. And what I found shocked me. Again and again, I was doing the same thing. I was taking profits quickly, protecting small gains, feeling smart, feeling disciplined, feeling responsible. But when I looked deeper, I realized something painful. Many of those trades continued moving, not a little, a lot. Some doubled, some tripled. Some became the exact kind of trades capable of changing an entire month. And yet I wasn't participating in those moves. Because every time the market offered me the possibility of a large reward, and fear convinced me to settle for a small one. First, I thought this was risk management. Then I thought it was discipline. Eventually, I realized it was neither. It was emotional discomfort. I wasn't exiting because the market was telling me to exit. I was exiting because uncertainty was making me uncomfortable. And that realization changed everything. Because once I saw it in myself, I started seeing it everywhere. Almost every trader I met was doing the same thing. Profits created fear. Losses created hope. Together, those two emotions produced the exact opposite behavior required for success. Winning trades were being cut short. Losing trades were being given endless chances. Think about how irrational that is. The trade proving you right gets closed. The trade proving you wrong gets another opportunity. And yet millions of traders repeat this behavior every single day. Not because they're stupid, not because they're lazy, not because they're incapable, because they're human. And human psychology was never designed for probability-based decision-making. It was designed for survival, which means the instincts that help us survive in everyday life often hurt us in the markets. And once I began understanding that truth, I started seeing trading differently. Because what looks like a trading problem is usually a psychology problem. What looks like a market problem is often a decision-making problem. And what looks like bad luck is frequently emotional behavior repeating itself. The charts weren't defeating me. The indicators weren't defeating me. The market wasn't defeating me. My own mind was. And the moment I accepted that reality, I finally started asking a much more important question. Why does the human brain naturally hold on to losing trades while selling winning trades far too early? Because once you understand the answer to that question, you begin to understand why so many intelligent traders spend years trapped in the same frustrating cycle. And that's exactly where the story gets interesting. The exit secret that separates winning traders from losing traders. The scoreboard that professional traders use. And that may be the most valuable lesson in this entire journey. Because for years, I believed profits were the ultimate scoreboard. Like most traders, I opened my platform every day and looked at one thing first. Money. If I made money, I felt successful. If I lost money, I felt like a failure. Simple. At least that's what I thought. But that mindset created a problem I couldn't see. A dangerous problem. Because when money becomes your only scoreboard, your emotions become attached to every single trade. And once your emotions become attached, consistency disappears. The emotional roller coaster. Think about what happens when your success is measured only by profit and loss. You have a winning day. You feel confident, powerful, optimistic. You feel like you've figured the market out. Then, the next day you lose. Suddenly confidence disappears, doubt appears, fear appears, frustration appears. Now you're questioning everything. Your strategy, your analysis, your future, your abilities. Nothing changed except the outcome, and yet your emotional state completely transformed. That's what happens when money becomes your scoreboard. Your confidence rises and falls with every trade, and confidence built on outcomes is fragile, very fragile, because outcomes are never fully under your control. The casino lesson. Imagine a professional poker player. They sit down at a table. They make a mathematically correct decision. They push their chips into the pot. The odds are in their favor. They've done everything correctly. And then they lose. Does that mean they played badly? No. It means probabilities played out differently than expected. Now imagine another player. They make a terrible decision, completely irrational decision. Somehow they win. Does that mean they played well? Again, no. The outcome doesn't determine the quality of the decision. Decision determines the quality of the decision. This is one of the hardest concepts for traders to understand, because most people judge decisions by results. Professionals judge decisions by process. And that difference changes everything. Why outcome? Thinking destroys traders. Let's say you take a trade. You break every rule. You ignore your plan. You move your stop loss. You increase risk. You make an emotional decision. And somehow, the trade wins. What happens? Most traders celebrate, but that's dangerous, because the brain receives the wrong lesson. It learns that bad behavior can be rewarded. Now let's imagine the opposite. You follow every rule perfectly. You execute flawlessly. You manage risk correctly. You stay disciplined, and the trade loses. Most traders become discouraged. Again, dangerous, because now the brain learns that good behavior can be punished. Over time, this confusion destroys consistency. The trader starts chasing outcomes instead of improving execution. And execution is the only thing truly under your control. The professional scoreboard. This is where professional traders think differently. They don't ask, did I make money today? They ask, did I execute correctly today? Notice how powerful that shift is, because execution is controllable. Profits are not. You can control preparation. You can control discipline. You can control risk management. You can control position sizing. You can control emotional behavior. You cannot control the market. And measuring yourself by something you cannot control creates frustration. Measuring yourself by something you can control creates growth. That's why elite traders focus on process, because process eventually produces results. But results alone don't always produce good process. The trader who changed his life. I remember speaking with a trader who had struggled for years. He was intelligent, hardworking, dedicated, but he was trapped in a cycle. Winning days created overconfidence. Losing days created self-doubt. His emotions were constantly reacting to his account balance. One day, he decided to stop tracking daily profits. Instead, he started tracking execution quality. Every trade received a score. Did he follow his plan? Did he respect risk? Did he avoid emotional decisions? Did he execute according to his rules? At first it felt strange, but after a few months something remarkable happened. His emotional stability improved. His confidence improved. His consistency improved. And eventually, his profitability improved. Not because he focused on money, because he focused on behavior. The execution score. Imagine grading yourself after every trading session. Not on profit, not on loss, on execution. Let's say you took 5 trades. Every trade followed your rules perfectly. That's a perfect score, even if you lost money. Now imagine another day. You made money, but you violated multiple rules, moved stops, entered early, ignored risk. That day receives a poor score, even though the account grew. Why? Because you're training yourself to value behavior over outcomes, and behavior determines long-term results. This concept sounds simple, but it completely transforms psychology, because now success becomes repeatable. Success becomes measurable. Success becomes independent of random short-term outcomes. The danger of short-term thinking. One of the biggest reasons traders struggle is because they box with immediate results. Today's trade, today's profit, today's loss, today's emotions. Everything is focused on the present moment. But professional traders think differently. They think in samples, large samples, hundreds of trades, thousands of trades, years of execution, because they understand something powerful. Any single trade is almost meaningless. The edge appears over time. Consistency appears over time. Profitability appears over time. And when you truly understand that, You stop treating every trade like a life-changing event. You stop reacting emotionally. You start acting professionally. Real meaning of confidence. Most traders misunderstand confidence. They think confidence comes from winning. It doesn't. Winning creates temporary confidence. Real confidence comes from trust. Trust in your process. Trust in your preparation. Trust in your ability to execute. Trust in your ability to handle uncertainty. Those forms of confidence are far more powerful because they survive losses. They survive drawdowns. They survive difficult periods. Outcome-based confidence disappears when conditions become challenging. Process-based confidence remains. And that's why professional traders appear calm, even during losing streaks. Their confidence isn't connected to outcomes. It's connected to execution. Why the best traders look boring. Have you ever noticed something interesting? The traders making the most money often look the least excited. No dramatic reactions. No emotional celebrations. No panic. No desperation. Just calm execution. Over and over again. To an outsider, it almost looks boring, but that's exactly the point. Professional trading isn't exciting. Professional trading is repetitive. It's consistent. It's disciplined. It's methodical. The excitement exists in social media. The professionalism exists in reality. And reality is where money is made. The most important question. At the end of every trading day, ask yourself one question. Not how much money did I make? Ask, did I become a better trader today? Those are very different questions, because becoming a better trader is within your control. The market cannot stop you from improving. The market cannot stop you from learning. The market cannot stop you from executing correctly. And when improvement becomes the goal, profit often follows naturally. The shift that changes everything. Eventually, every successful trader experiences a shift. A moment when they stop chasing money and start mastering behavior. A moment when they stop measuring success by outcomes and start measuring it by execution. A moment when they realize that consistency isn't created by predicting markets. It's created by managing themselves. And once that shift happens, trading begins to feel different. Less emotional, less stressful, less chaotic. Because now you're focused on what matters most. Your actions, your decisions, your discipline, your process. But there is one final obstacle, and yet, even after understanding all of this, many traders still struggle. Not because they lack knowledge, not because they lack skill, not because they lack opportunity. They struggle because of one final obstacle, an obstacle so powerful that it can destroy years of progress in a matter of days. It creates revenge trading. It creates account blow-ups. It creates emotional spirals. It causes traders to abandon good systems. It convinces intelligent people to make irrational decisions. And it usually appears right after a loss. Or right after a series of losses. Because losing money is one thing, but handling the emotions that follow a loss, that's where the real challenge begins. And until you master that challenge, true consistency remains out of reach. So in the next part, we're going to explore the most dangerous emotional trap in trading, the trap that has ended more trading careers than bad strategies ever could. The trap known as revenge trading. And once you understand how it works, you'll never look at losses the same way again. The exit secret that separates winning traders from losing traders. The silent account killer. And once you understand how revenge trading works, you'll never look at losses the same way again. Because the most dangerous trade you'll ever take is usually the one immediately after a painful loss. Not because the setup is bad, not because the market changed, but because you changed. Your emotional state changed. Your mindset changed. Your relationship with risk changed. And the moment that happens, you stop trading the market. You start trading your emotions. The trade that isn't really a trade. Let me paint a picture. Imagine you take a perfectly valid setup. You follow your plan. You manage risk correctly. And then, you lose. Not unusual. Losses are part of trading. But this particular loss feels different. Maybe it happened quickly. Maybe it was your third loss in a row. Maybe it erased several days of profits. Whatever the reason, it hurts. And that's when the voice appears. A dangerous voice. A convincing voice. A voice that sounds rational. It whispers, get it back. Take another trade. You know the market. You can't end the day like this. One good trade fixes everything. At that moment, something important happens. The objective trader disappears. The emotional trader takes control. And the next trade is no longer about opportunity. It's about recovery. Not recovery of money. Recovery of emotional comfort. And that's why revenge trades are so dangerous. They aren't based on probability. They're based on pain. Why losses feel personal. Personalizing losses. You see a losing trade and immediately attach meaning to it. Not good enough. I'm failing. I can't do this. My strategy doesn't work. The problem is that none of those conclusions are supported by one trade, yet the brain jumps there anyway. Because human beings naturally create stories. We need explanations. We need certainty. We need reasons. So when something painful happens, the mind starts constructing narratives. And most of those narratives are wrong. A loss does not mean you're incompetent. A loss does not mean your system is broken. A loss does not mean success is impossible. A loss means one thing. That trade lost. Nothing more. Nothing less. Professional traders understand this. Amateurs rarely do. The ego's need for justice. The market doesn't care what you deserve. That's one of the hardest truths in trading. You can do everything correctly and still lose. You can make mistakes and still win. The market isn't rewarding effort. It isn't rewarding intelligence. It isn't rewarding intention. It's simply expressing probabilities. The ego hates that reality. The ego wants fairness. The ego wants validation. The ego wants immediate rewards. So when a loss occurs, the ego starts demanding justice, wants the money back, immediately. Not tomorrow, not next week, now. And that's exactly why revenge trading begins. Trader stops waiting for opportunity. The trader starts hunting for emotional relief. The casino mentality. Think about what happens in a casino. Someone loses money. Instead of accepting the loss, they increase the bet. Why? Because emotionally, recovering feels easier than accepting. Acceptance requires maturity. Acceptance requires discipline. Acceptance requires emotional strength. Chasing requires none of those things. It simply requires impulse. And unfortunately, impulse is easy. That's why so many traders fall into the same trap. Loss, frustration, impulse, bigger risk, bigger mistake, bigger loss. The cycle repeats, and every repetition strengthens the habit, until eventually the trader isn't following a system at all. They're simply reacting emotionally to outcomes. Day that changed my thinking. I remember a specific period in my own journey. Period where I wasn't losing because of my strategy. I was losing because of my reactions. One day I took a loss. Nothing unusual. Setup failed. Stop was hit. Risk was controlled. Trade was over. That should have been the end of the story. Instead, I became angry. Not visibly angry. Internally angry. Dangerous kind. Kind that whispers instead of shouting. Kind that sounds logical. I immediately started looking for another trade. Not because it met my criteria, because I wanted the loss back. Within a short period of time, I lost again. Then again. Then again. At the end of the day, the original loss wasn't the problem. My reaction to the original loss was the problem. That day taught me something I never forgot. First loss is usually market-generated. Biggest losses are often self-generated. Professional response to loss. Now compare that behavior to how professionals respond. Professional trader takes a loss, then pauses. Not because they're afraid, because they're aware. They understand that emotions influence decision-making. They understand that frustration distorts judgment. They understand that emotional states matter. So they create space. Space between stimulus and response. Space between loss and action. Space between emotion and decision. And inside that space, clarity returns. Objectivity returns. Discipline returns. That pause is incredibly powerful because it prevents temporary emotions from creating permanent damage. The real purpose of a stop loss. Most traders think a stop loss exists to protect money, and that's true, but it's not the complete truth. Stop loss also protects psychology. Think about it. Every stop loss is an act of acceptance, an acknowledgement that uncertainty exists, an acknowledgement that being wrong is normal, an acknowledgement that no trade is guaranteed. Stop loss isn't just protecting capital, it's protecting emotional stability. Because once losses become uncontrolled, emotions become uncontrolled. Once emotions become uncontrolled, execution collapses. The difference between pain and suffering. This distinction changed my understanding forever. Pain is unavoidable. Suffering is optional. Losing trade creates pain. That's normal. Every trader experiences it. Suffering begins when we resist reality, when we argue with the market, when we refuse to accept outcomes, when we demand certainty from an uncertain environment. That's where suffering lives. Professional traders feel pain. They simply don't add unnecessary suffering. They accept, just, move forward. Because they move forward quickly, they preserve energy for the next opportunity. Power of detachment. One of the greatest skills a trader can develop is emotional attachment. Not indifference, not laziness, not a lack of commitment. Attachment. The ability to participate fully without becoming emotionally trapped by outcomes. Imagine a surgeon performing an operation. The surgeon cares deeply about the result. During the procedure, emotion cannot take control. Execution must remain objective, professional, precise. Trading is similar. You care about results. But while the trade is active, your responsibility is execution, not emotional reaction, execution. And the better you become at separating those two things, the stronger your performance becomes. Why consistency is rare. People often ask why consistency is so difficult. The answer isn't strategy. There are thousands of profitable strategies. The answer isn't information. Information is everywhere. The answer is emotional consistency. Most traders have inconsistent emotions, which creates inconsistent decisions, which creates inconsistent results. That's why consistency isn't really a market problem. It's a psychological problem. And psychological problems require psychological solutions, not more indicators, not more charts, not more predictions, greater self-awareness, greater emotional control, greater discipline. The lesson losses are trying to teach you. Every loss contains information, not just market information, psychological information. How did you react? What did you feel? Did fear appear? Did frustration appear? Did impatience appear? Did anger appear? Did revenge appear? Those answers reveal more about your future success than the trade itself, because every emotional reaction highlights an area that still needs development. And development is where growth occurs. Not in winning, in learning. The moment a trader becomes dangerous. There is a moment in every successful trader's journey when something changes. A moment when losses stop controlling behavior. A moment when outcomes stop dictating emotions. A moment when discipline becomes stronger than impulse. That's the moment a trader becomes dangerous. Not dangerous because they're aggressive. Dangerous because they're consistent. Dangerous because they're stable. Dangerous because they can execute under pressure. The market rewards those people over and over again because consistency compounds, just like capital, final transformation. But there is still one final transformation left, deepest transformation, one that separates traders who survive from traders who thrive. Because eventually every trader must answer one question. Who am I becoming through this process? Not how much money am I making? Not how many trades am I winning? Who am I becoming? Because trading isn't just building an account. It's building a person. More disciplined person. More patient person. More self-aware person. Or, unfortunately, more emotional person. More impulsive person. More reactive person. Choice happens every day. With every decision. With every trade. And in the next and final part, we're going to bring everything together. We'll talk about the ultimate lesson hidden beneath every chart, every trade, every win, and every loss. The lesson that transformed average traders into professionals. The lesson that changed my understanding of trading forever. And once you truly understand it, you'll never look at the market the same way again. Next, the exit secret that separates winning traders from losing traders. The ultimate trading truth. After everything we've discussed, the fear, the greed, the early exits, the oversized losses, the revenge trades, the emotional roller coaster, we finally arrive at the lesson that sits underneath all of it. The lesson most traders spend years trying to learn. The lesson some never learn at all. And it's this. Trading is not a battle against the market. Trading is a battle against yourself. For years, I thought the market was my opponent. I thought the charts were the challenge. I thought success would come from finding the perfect indicator, the perfect setup, the perfect strategy, the perfect entry, the perfect prediction. But the market kept teaching me the same lesson over and over again. The problem wasn't the chart. The problem wasn't the setup. The problem wasn't the market. The problem was the person looking at the screen, me. And once I accepted that, everything started to change. Market is a mirror. Most people think the market creates emotions. It doesn't. The market reveals emotions. Think about it. The market doesn't create fear. Fear was already inside you. The market simply exposed it. The market doesn't create greed. Greed was already there. The market simply revealed it. The market doesn't create impatience. It exposes impatience. It exposes ego. It exposes insecurity. It exposes overconfidence. It exposes every psychological weakness you bring into the game. That's why two traders can look at the exact same chart and make completely different decisions. The chart is identical. Psychology is not. Why some traders never improve. This is important because most struggling traders make the same mistake. Every time they lose, they look outward. New indicator, new strategy, new course, new mentor, new system, new secret. There is nothing wrong with learning. Learning matters. But eventually you must stop asking, what strategy should I use? And start asking, what behavior must I change? Because at some point, the strategy stops being the bottleneck. You become the bottleneck. And that realization is uncomfortable. But it is also incredibly powerful. Because once you realize that the problem is internal, the solution becomes internal too. And internal solutions last forever. Professional mindset. Professional traders understand something that amateurs often miss. They know they do not control outcomes. They only control execution. Read that again. They do not control outcomes. They control execution. They cannot control what the next candle does. They cannot control news. They cannot control volatility. They cannot control buyers. They cannot control sellers. But they can control their risk, their discipline, their position size, their emotional reactions, their consistency. And because they focus on what they control, they stop wasting energy on what they don't. Underscore. The freedom of acceptance. One day something remarkable happens. You stop needing every trade to win. You stop needing the market to prove you right. You stop needing certainty. You stop needing validation. That is when real freedom begins. Because the need to be right is one of the most expensive habits in trading. The market doesn't pay you for being right. The market pays you for managing risk. The market pays you for discipline. The market pays you for consistency. The market pays you for following your edge over time. That's where the money comes from. Not certainty. Consistency. A trader who finally gets it. Imagine two traders. First trader wins today, makes money, feels amazing. Tomorrow loses money, feels terrible. Every outcome controls his emotions. Every trade controls his confidence. Every result controls his identity. Now imagine the second trader. Wins today, stays calm, loses tomorrow, stays calm, wins next week, stays calm, loses next month, stays calm. Why? Because his confidence isn't attached to outcomes. His confidence is attached to process. And process is stable. Outcomes are not. That trader eventually wins. Not because he's smarter, because he's stronger psychologically. The secret behind every great trader. If you study enough successful traders, you start noticing something. Different strategies, different markets, different personalities, different styles. But one common characteristic, emotional stability. They aren't constantly panicking. They aren't constantly chasing. They aren't constantly reacting. They're calm, patient, focused, disciplined. They trust their process. And because they trust their process, they don't need to force results. Results arrive naturally. What the market is really teaching you. Most people think trading teaches money management. It does. Most people think trading teaches risk management. It does. Most people think trading teaches discipline. It does. Beneath all of those lessons, trading teaches self-awareness. Because every day the market asks the same question. How will you respond? Not what will happen. How will you respond when you win? How will you respond when you lose? How will you respond when you're afraid? How will you respond when you're excited? How will you respond when uncertainty appears? Your answers determine your future. The day everything changes. There comes a day when you stop chasing perfect entries. A day when you stop searching for magical indicators. A day when you stop looking for shortcuts. And instead, you focus on mastering yourself. That day changes everything. Because now you're no longer trying to predict every move. You're trying to execute every decision. And execution is where professionals live. That's where consistency lives. That's where confidence lives. That's where long-term profitability lives. Underscore a message to the trader watching this. Maybe you're struggling right now. Maybe you've taken losses recently. Maybe you're frustrated. Maybe you're doubting yourself. Maybe you're wondering if you'll ever become consistently profitable. If that's you, I want you to remember something. Every professional trader was once a beginner. Every confident trader was once uncertain. Every disciplined trader was once emotional. Every successful trader was once struggling. The difference is, they didn't quit. They learned. They adapted. They improved. One trade at a time. One lesson at a time. One decision at a time. You can do the same. _. If you remember nothing else from this video, remember this. A great entry can put you into a trade. A great exit can change your account. Great psychology can change your life. Because psychology influences every decision, every entry, every exit, every risk, every opportunity, everything. Master your psychology, and the market becomes easier. Ignore your psychology, and the market becomes harder. The choice has always been yours. _. The market will open again tomorrow. New opportunities will appear. New trends will form. New trades will come. But before your next trade, take a moment and ask yourself, am I trading my plan, or am I trading my emotions? Because the answer to that question may determine everything. Thank you for watching. If this video helped you see trading from a completely different perspective, make sure you subscribe to the channel and turn on notifications so you never miss future videos on trading, psychology, discipline, risk management, and the mindset of consistently profitable traders. If you found value in this video, hit the like button and share it with another trader who needs to hear this message. And remember, the goal is not to predict the market. The goal is to master yourself. I'll see you in the next video. Until then, stay disciplined, stay patient, protect your capital, trust your process, and keep learning. Thank you for watching.